So, tens of billions of dollars have been wiped off the world's stock markets in just hours. Across Europe, major trading indices like the UK FTSE and the German DAX lost more than 3% of their value as jitters continue over the future of the euro currency and the financial stability of the countries in it. In a week, the value of Europe's biggest companies has fallen by nearly $570 billion. In the US, the Dow Jones fell 4.3%. That is the biggest drop since October 2008. We'll be live in New York for reaction to that in just a few moments. Well, the markets were partly reacting to a warning by the head of the European Commission, José Manuel Barroso, that the crisis was spreading. Jonah has been watching events unfold and has this report.
Markets have tumbled again in a week that has so far seen hundreds of billions wiped off the value of European stocks and shares. A dark mood has settled over the midsummer holiday season as Italy and Spain feel the heat of financial market pressure. In Madrid, a bond auction to raise nearly $5 billion in loans on the international markets confirmed the rising cost of borrowing for both countries that could soon become impossible to sustain. The Eurozone is scrambling to respond. A letter to leaders from European Commission President José Manuel Barroso declares the crisis has gone beyond so-called periphery economies like Greece, Ireland and Portugal. It calls for urgent efforts to rethink the euro's financial defences. Though these developments are clearly unwarranted on the basis of economic and budgetary fundamentals, he writes, they reflect a growing scepticism among investors about the systemic capacity of the euro area to respond to the evolving crisis.
But what may calm it down and should is intervention as quickly as possible from the European Central Bank in terms of buying bonds in those markets that are now being affected, like Italy and Spain, and being seen, therefore, to be on top of the issue. And if they don't do this really quickly, then the markets will say, right, we're going to push it to default.
In Frankfurt, European Central Bank President Jean-Claude Trichet hinted the bank would try to drive borrowing costs down by stepping in to buy sovereign debt.
I would not be surprised if before the end of this teleconference you would see something on the market. I don't exclude that.
2 weeks ago, Eurozone leaders applauded themselves for reaching a landmark deal to strengthen financial assistance mechanisms and calm the markets. But the rot continues. Now the Eurozone's third and fourth largest economies, Italy and Spain, are in trouble. A bailout for either could prove too large for the euro system as a whole to withstand. Jonah, Al Jazeera.